Hello folks, it is Wednesday, it's 11 o'clock San Diego time. Makes it pretty late in the session. We got about 2 hours left before the markets close. I'm going to focus on the stock market today. And of course the question on everybody's mind is the rally over? And of course my premise is that this was nothing more than a bear market rally, counter trend rally. Primary trend in the stock markets is down, has been for all of this year. Which reminds me, Franklin Sanders, in one of his daily emails this week, he pointed out that so far this year, the stock markets have lost $12 trillion worth of value, $12 trillion worth of value. So primary trend in the stock markets is down. Let's jump into, it's funny, when I opened up this set of charts, this was the first one I happened to look at, and I'm like, yeah, okay, I'm done. I don't need to look at anything else. If you're wondering, is the rally over? In my opinion, this is the answer right here. This is the number of stocks that are above their 200-day moving average. And you can see that this is what I was just saying. The trend in 2022 has been downwards, fewer and fewer stocks in bullish mode and more stocks in bear mode. We're looking at the weekly time frame. These last few candles, this is this bear market rally that has just rolled over. And of course, this candlestick for last week, that is a very bearish candle. That is in Japanese candlestick terms, we might call that a gravestone doji. So very bearish candle. And then we get a big gap down on Monday's open. And here we are midweek. Still leaving an open gap there, and expectation is that we're headed lower here. So anyway, for my mind, and of course I'm biased, I have to acknowledge my bias. I'm bear on the stock market, but yeah, so I'm acknowledging my bias on the stock market. The bullish. You know, what the stock market needs to head back higher is some kind of bullish catalyst. And of course, what everybody is hoping for is a Fed pivot. In my opinion, we're not going to get a Fed pivot. The Fed is going to continue raising interest rates under the cover of fighting inflation. And of course, what they're really fighting is a global debt collapse. They're trying to keep the banking system liquid. So remember that we're living in a debt-based economy. Everything about our economy, our money, everything relies on debt, credit. And the central banks are going to protect themselves first and foremost, which means fighting the global debt collapse, not keeping the stock market inflated or the real estate market inflated. So anyway, just my opinion, there's not going to be a Fed pivot. They're going to continue increasing interest rates. I've shown you this article twice. This is the third time I'm showing it. This was on JS Mindset, Jim Sinclair's website. This author is explaining how fighting inflation provides the Feds a cover story for pumping money into the banking system. And again, the banking system is going to protect the banking system first and foremost. And this mechanism, it's the IORB, that basically as interest rates rise, the amount of money that the Fed pumps into the Federal Reserve banks increases. So we got 36 banks in the Federal Reserve System, and you can see this stair-step chart. Every time the Fed has raised interest rates, it has increased the amount of money that the Fed is supplying to those 36 banks. And so under the cover of fighting inflation, what the Fed is really doing, or one of the things, this is just a single mechanism. They've got a pot full of mechanisms, backdoor mechanisms for pumping money into the system. Currency swaps, there's a number of ways that they're pumping money into the banking system. This is just one of those. But anyway, the Fed is, in my opinion, will continue to increase interest rates because it lets them increase the amount of money they are pumping into the banking system as they attempt to fight the global debt collapse. And so that's enough of me blabbering. Let's look at the charts. This is the S&P 500 in the monthly time frame. You can see this is 2022, again, primary downtrend. We dropped briefly into bear market territory, which is below 20%. We've bounced back out of it, but look at this this candlestick for this month. Again, this is a bearish candle. It's a doji. It's a gravestone doji in Japanese candlestick terms. MACD in bull mode on a sell signal. Energy just a little bit above the low end. S&P 500 in the weekly time frame. We can see here's this counter trend rally, and it looked like a breakout. We had this downtrending channel, and then price broke above that channel, made it all the way up to the 40-week moving average, and then rolled over. And so that's where we're at right now. Prices have rolled over, currently playing with support along this horizontal support resistance level. You can see here it was a little bit of resistance there, but support numerous times, support failed, tested as resistance, and then pushed through, and now we're back testing it as support again, although actually prices have pushed a little bit below that level at this point. MACD is in bear mode, suggesting that the primary trend is now downwards. Notice that MACD histogram, we've gone from the dark green to the light green, which suggests that momentum is headed lower. Energy is dropping from an elevated level. This is the daily time frame, S&P 500. Rollover at the 200-day moving average has now dropped below the 20-day moving average, and again, currently playing with support along this horizontal support resistance level or zone, however you want to look at that. In Andrew's pitchfork terms, we can see that, price found resistance all the way throughout that bear market rally, found resistance along this median line before it rolled over, dropped right through support at the lower median line of that fork. The next support from an Andrews pitchfork is down here at 40.60, something like that, 40.60, 40.70 in that range. MACD in bull mode on a sell signal, energy very low. Dow in the monthly time frame, basically same picture as S&P 500, pullback, drop into bear territory, bear market rally that has rolled over, very bearish candlestick. I should have MACD and stochastics on here. Not that they're going to show us anything. So primary trend upwards, currently on a sell signal, energy just over the low level. Dow in the weekly time frame, same as S&P 500, push up into the 40-week moving average, roll over, very bearish candlestick, definitely gravestone doji, and then a continuation lower this week. MACD in bear mode, energy very elevated but declining. Dow in the daily time frame, same story. Drop below the 20-day moving average, currently just above support at the upper median line of this shift pitchfork. We can see that it provided support back here, and looks like it is currently providing support as well. MACD in bull mode on a sell signal, energy very low. NASDAQ in the monthly time frame dropped into bear territory, bear market rally, pulled it out, gravestone doji. This is a parabolic price move, and parabolic price moves never end well. Expectation is at some point price will drop below this curve and we'll get a dramatic decline in the NASDAQ, and of course that would suggest in all of the equity markets, NASDAQ in the weekly time frame, same as the other markets, pulling down towards the 10-week moving average. That could be a support level. MACD in bear mode on a buy signal, energy elevated but declining. NASDAQ in the daily time frame has dropped below the 20-day moving average, got overhead resistance at the 20-day and this median line. That's several median line extensions of a shift pitchfork. MACD in bull mode on a sell signal, energy very low. This is the Russell 2000 index. This is primarily small and mid-cap stocks, as opposed to the major markets, which are all the big cap stocks. Got a pull back down to the median line of this Andrews pitchfork before we had a bounce. This chart actually looks a little bit better than the other charts that we've just looked at, although the same as the other charts, bear market rally that appears to have rolled over. MACD in bull mode on a sell signal, energy very low. Here's the Russell in the weekly time frame, pushed up through the 40-week moving average before rolling over. And of course, let's expand this chart. There's the current candle. It's a doji, little bit bullish, just based on the lower wick is longer than the upper wick, gives it a little bit of a bullish bias. MACD is on a buy signal, but in bear mode, energy is elevated. So if there is any hope for the stock market, looks like it's going to start in the small caps and mid caps. Here's Russell in the daily time frame, playing with this horizontal support resistance zone, finding support and resistance in that level. MACD in bear mode on a sell signal, energy is low. So that is it for the charts. In my opinion, this is the most significant chart that we've looked at today. It's the number of stocks above the 200-day moving average. Very bearish candle, gravestone doji, followed by a gap lower on Monday and continuing lower through the week. So that's it for this update on the stock market, folks. I will talk to you soon.